Hey, yeah. Alright, okay, here's another one that you'll like. And this one's the Bullish Engulfing pattern. Alright, and it consists of two candles, and it does need a confirmation. Okay. Now, these should only be tried at the bottom of trends, and not really at midpoints of trends. It should really be at major lows. Alright, so let's go ahead and draw the pattern out. And what will be happening is that you'll be coming in from a downtrend. Oops, let's just take that one out actually and replace that with a red. So you're coming in from a downtrend. Alright, the market's going nuts, it's retracing a little bit. Alright, and it comes all the way down to the bottom towards your support. And what you're going to see is a candle there. Okay, and then you're going to have another one that completely engulfs it. Alright, and that happens at the bottom of the trend. Okay, so what you will need now is another one that will actually close off higher or break the high. There's your high, there's your high there, there's your close. It closes higher than the previous high, so that's good. Even if the high, if the close didn't break the previous high, but the current candle's high beats the previous day's high, then that's good as well. Now you might have noticed that I've been saying, like, you know, the days or the 4-hour bar, not any bars like the 1-hour bar or the 3-hour bar, or, you know, the 30-minute bar or anything like that, because to do candlestick for pattern formations to that and to actually profit from it, like just doing naked trading, you should really use the 4-hour and the daily time frame. All right. I mean, it's just the problem that I'm thinking that a lot of people have, that they lose their patience after a little while, thinking that it's not going to do them no well, because it's like, you know, the investment side of things hasn't really dwelled, you know, hasn't settled into their mind. You know, it's like, oh, Forex is easy to make money from. It's quick in and quick out, make a bit of pile of cash. That all being fair and well as well. But if you have that mindset when you go into the Forex, you're not going to do all that well in the long run, because you'll be thinking about the wrong type of ways to make money with the right methods. Alright, so really you should be looking at how to try and make money for the long term, okay, and use those higher time frames. I'll tell you what, it's so much more relaxing to sit here on a 4-hour or a daily time frame and not be too concerned about your position that's open, okay, because you know that the daily time frame has 24 hours before the close of that candle, so anything can happen within that time frame. But using the correct strategies and approaching your trades on the correct formations is and will indefinitely give you the profit that you need, alright, or that you are hoping to achieve. Eventually it will, more times often than not that it will, if you follow the patterns to the letter, alright, and give it time to mature. I mean, like your baby born wasn't matured, you know, in 90 days. Okay, so so yeah, give it time to mature when you're on these larger time frames. And these candlestick formation patterns, when they come in, and they can take, sometimes you might be waiting for about a week for one, but if you can make, say, like $500 like inside 1 week off of one signal, that's just not bad to start off with. Alright, that's like 2 grand a month on 4 trades. And then as you start building up experience, you can maybe do the higher lottage, or you can maybe do another currency pair. Alright, and trade 2 currency pairs at the same time. So that's another thing as well, is that when you're going to be working on these kind of strategies, the best thing to do is actually to do this on 1 currency pair. And the best type of currency pair to do this on, but there is really no best, but I would just say a faster currency pair such as the euro or the British pound. Alright, and just stick with that particular currency pair, and see how you get on. Alright, so here it's like, as I was saying, with the bullish engulfing pattern, this doesn't always happen all the time. That's why I went into a little bit of a, you know, a yarn about, you know, long term and working off 4-hour time frames or above. You will get from time to time some false signals as well, or like a signal that will come up like this one, but then it will immediately reverse, and you know, you don't want that. So you got to be careful when you're doing these long-term trades. Is again, take a look, is there, if the resistance is there or not. Okay, and if the resistance is like quite high up and you're like 200 pips away from that area, then it'll be, you know, reasonably okay to go ahead and target it. If it's around about 80 pips or 50 pips or something like that, and you're working off the 4 hour or daily time frame, then I would consider not taking it on. You know, maybe up for another signal or something like that. Okay, so let's see if we can go ahead and find you some examples of the engulfing pattern, and here's one right here. Okay, we're in the initial downtrend. All right, and then here is our first setup candle, and then this one engulfs the first one. Okay, now it's not the kind of one that I would choose. I would actually wait for a bottom. So it's okay, let's see, I'm looking for an area where it's here. This is actually a bullish engulfing pattern as well, but because this one didn't actually come down lower, then it's not going to really count, but it's very, very close. The sentiment, it still shares the same sentiment as the bullish engulfing pattern, so that will still work. Fair enough, it did go up, but hey, that, you know, with this one, if you take a look at the other one that we had, maybe it's my indicators messing up. That happens. Okay, this one does look exactly the same as the other one, so there is an engulfing, but for some reason this indicator didn't mark that other one. I mean, here's another one, bearish engulfing pattern, up it goes. Alright, here is another one here, and then you wait for the confirmation. So here is your candle 1, candle 2 setup, and there's your engulfing pattern, engulfs the body. Actually, this it's got a little high on it, but that's still okay, still class as one. Wait for the confirmation and then go long. Alright, you're on the 1 hour time frame. Now with the Aussie dollar USD, if you're going to trade this pair, one thing to understand is that once you've established the highs and the lows, and you've seen a signal and it's bounced off one of these highs or it's bounced off one of these lows, then you can be assured that the Aussie dollar is going to keep on going in the direction after it's hit that major like resistance level. So here is like an evening star right there. Okay, then go short. Once the trend has been established from a resistance level, okay, which will take a little while, okay, and once it's been established, it will just keep on going, alright, until it finds a support that it doesn't want to go down any lower. Alright, it's a slow moving pair, but it's a committed pair. So, you know, while you'll see like the euro go up and down a little bit, but its general direction is down, you will see that the Aussie dollar will just be very, very, you know, smooth and in its own little world, just doing what it needs to do, while, you know, the pound on the versus the USD is going crazy, you know, in a downwards fashion, but this one's just taking its time. So that's one thing, good thing to you know, to sort of take note when you're using the Aussie dollar as your preferred currency pair. But I would basically stick with the euro and the USD. It's a faster pair, and you should be able to get a fair bit of action out of it. Alright, so I will leave you with that video, and I will see you in the next one. Bye for now.